I don't know if silver is going to go back below 30,000. I mean 30. It might go below 30, but I don't think it'll stay below 30. Not to worry about it. I would buy it. Gold is now about $70 off the high of 24.50. It's at 23.77. I think the support in gold is moving higher. So it was 2,200. Now it's probably 2,300, maybe even a little better. That this is an opportunity to buy both metals, but in particular, silver.
Today, we are unpacking Peter Schiff's latest takes on gold, silver, and the Fed's moves. Let's dive in. First, silver might dip below $30, but Peter Schiff says it won't stay there long. At $30.6, it's a prime buying opportunity. Gold is currently at $2,377, $70 off its high. Schiff sees solid support at $2,300, indicating it's a good time to buy. The recent sell-off? Blame the Fed. Mixed messages about future rate cuts caused gold and silver to dip, but Schiff argues the timing of rate cuts is irrelevant. With rates already too low, gold and silver are set to rise. So now, let's start the video.
I've been telling people that they should buy more silver than gold because gold kept going up and silver wasn't. And I guess that the reason for that was that central banks were the primary buyers of gold and that they weren't buying silver. And since the general public has been selling, in fact, we've had 11 consecutive monthly outflows out of gold ETFs, indicating that investors in the US, also in Europe, have been selling, even though the price has been rising. So somebody must be buying enough gold to offset all this retail investor selling. And a lot of that is central banks. And they don't buy silver. They don't have room for silver. They're buying gold. And so I thought that silver was kind of getting left out, but that eventually, like a coiled spring, it would explode. And I kept saying, buy silver, buy silver. It's got to go up. There's no way gold's going to keep rising and it's going to leave silver behind. In fact, I know that in a real bull market, which I believe we're in, silver could lead gold. And so it's been lagging, and so I wanted my audience to buy it before it jumped ahead. Well, now it had that breakout, and so I did that special video on Thursday to alert people to this breakout, to get them to go and buy some silver on that breakout. Well, the reason I'm doing this video today is we've had a nice 2-day correction in price following that breakout and move to new highs. Most of the decline was today, although we had some of the decline yesterday. So I mentioned that silver got all the way up to $32.50, which is still low. It's not like that's a high price. It's just the highest it's been since 2013. But as I'm recording this podcast on Wednesday night, silver is back down at $30.73. So that's a pretty substantial pullback, about $1.80 or so from the $32.50 that it traded on Monday. And if 30 is now the support, which I think it is. Now that doesn't mean silver can't go below 30, but I think 30 is to silver what 2000 was to gold. Once we broke above 2000 became support. And yes, every once in a while we dip below 2000, but we never stayed below it for long, and it quickly came back. So I don't know if silver is going to go back below 30,000. I mean 30. It might go below 30, but I don't think it'll stay below 30 for very long. And at $30.67, that's close enough to 30 not to worry about it. I would buy it. On gold, gold is now about $70 off the high of 24.50. It's at 23.77. I think the support in gold is moving higher. So it was 2,200. Now it's probably 2,300, maybe even a little better. So I don't think you're going to get much bigger pullbacks than what we've just seen in the last couple of days. But I wanted to reiterate that this is an opportunity to buy both metals, but in particular, silver. And the catalyst for the sell-off today was the Fed. And you had kind of like a 1-2 punch to the gold and silver market from the Fed, because first you got some statements that were made by a Fed official, and I forget who it was. I mean, I guess it's immaterial, because you could just switch them around because they don't really say anything any different. But one of them was on CNBC, and he had an interview. And then later on in the day, we got the minutes, the FOMC minutes that were released. So that was the second punch. The first one was the interview. And during this interview, the guy said that the rate cuts that are coming, right? The Fed is still talking about how these rate cuts are coming. But he mentioned that they're probably not going to start until later in the year. And that if they start later in the year, there may only be one, right? Because they may start the rate cuts so late that only one of them happens in 2024. And so we get the other rate cuts in 2025. So as soon as those words came out of this guy's mouth, gold and silver immediately sold off. Again, the traders who are selling gold and silver still don't understand why the prices are rising in the first place. It doesn't matter when the Fed cuts rates. It doesn't even matter if they do cut rates. They never have to cut rates. The Fed could relieve rates right where they are, and gold and silver prices should skyrocket. Why is that? Because they're too low. The Fed aborted the hiking campaign too soon. And so it doesn't matter if they cut rates. Sure, if they cut rates, maybe gold and silver will go up a little quicker, but they're going to go up no matter what. Because the one thing we know is that the Fed is not going to raise rates. And one of the ways we know that is from the FOMC minutes that came out today. Because when those minutes came out, once again, they were interpreted as being hawkish because Fed governors in those minutes indicated that there was some concern about inflation being higher than they thought. Well, I mean, duh. I mean, of course they have to acknowledge that, but there was nothing new in these minutes. There was nothing hawkish in these minutes, but gold and silver were already pulling back from the highs. And when this came out, the spin was, oh, look, they're worried about inflation. And so they're not going to cut rates as soon as we thought. Well, if they were really worried about inflation, they wouldn't even be talking about cutting rates. That would be the last thing on their mind. The fact that they're still talking about cutting rates and they're just kind of arguing about the timing of when they're going to start. That right there proves that they don't care about inflation. They're not fighting inflation.
Thanks for tuning in. Today, we covered why silver and gold are hot buys right now and how the Fed's moves are impacting the market. If you found this helpful, please like, share, and subscribe for more sharp insights. Stay informed and see you next time.